Essay 210, agreeing the terms of audit engagement. The objective of auditor is to accept and continue an audit engagement only and only when the basis upon which the audit has to be performed has been agreed with the client. Okay, so the agreeing the terms of engagements have two sub points, that is agreeing the terms of audit engagement at the beginning of the audit and agreeing the terms of audit engagement during the course of audit. So at the beginning of audit again has two parts, that first is initial audit engagement and second is recurring audit. Initial audit engagement means where the auditor is auditing the firm for the very first time. Okay, so in this case also there come two cases, that is when limitations are imposed by the management, and the second is when there is no limitation imposed by management. So when the management imposes limitation on the auditor which may cause him to not obtain reasonable assurance regarding the financial statement status, then the auditor is required to not accept the audit engagement, unless required by the law. And the second is when there is no limitations imposed by management. When there is no limitation imposed by management, then there has to be precondition for an audit which need to be checked. Okay, so a certain existence of preconditions for audit. Now what is preconditions for an audit? Preconditions for an audit is to determine whether the FRF is acceptable. FRF means financial reporting framework is acceptable. The second is to obtain agreement from the management that it understands its responsibilities for preparation and presentation of financial statement. Second, exercising necessary internal control to enable the preparation of financial statements that are free from material misstatements. Third is to provide the auditor access to all relevant information, additional information that auditor may request from management, and unrestricted access to person within the entity for the purpose of obtaining audit evidence and any other purposes at all times. So to provide the auditor with three things. First is access to all relevant information, documents, books of account and everything what he needs. Second is additional information that auditor requests from management. And the third is unrestricted access to person within the entity at all times. So these are the preconditions for an audit. So when the preconditions of an audit is also there and there is no limitations imposed by management, then the auditor is ready to accept the audit engagement. And when there is the preconditions for an audit does not exist, okay, then the auditor is required to discuss this matter with the management. In two cases, the auditor is compulsorily required to not accept the audit engagement. What are those two cases? The first is unacceptable FRF and the second is management does not agree with the responsibilities. Okay, in these two cases, auditor is required to not accept the audit engagement. And now comes the recurring audit. So in recurring audit, there can be circumstances which requires revisions in terms of engagement. So what are the circumstances that requires revision in terms of engagement? These are indication that the entity misunderstands the objective and scope of audit. Second, the revision or special terms of engagement. Then recent change of senior management. Then change in ownership, significant change in nature or size of entity's business. There is change in any legal or regulatory requirement. Then there is change in FRF adopted in preparation of FS. And then there is change in other reporting requirements. Okay, so these are the circumstances which require revision in terms of engagement. So when these are triggered, then the auditor is required to send a new engagement letter to the management. And if there are no such circumstances which requires revision of engagement letter, then there is no further duty of the auditor to do anything. Then there comes the during the course of audit, management requests for changes in terms of the engagement letter. So when management requests for change in terms of engagement letter, then auditor is required to check or determine its effect on level of assurance and reasonable justification for the same. Okay, when auditor is satisfied that the change which is being requested by the management is reasonable, then auditor will simply accept those changes and record new terms in the engagement letter. But when the auditor is of the view that the change that is requested by the management is not justified, then auditor is required to not accept those changes. Then management may not permit the auditor to continue the audit. Then the auditor is required to withdraw from the audit engagement and check whether he is required to report to the appropriate authority or not. If he is required to report about this to an appropriate authority, then he should do that and he should withdraw from the audit engagement. One more topic which is not covered in this chart book but is important is the principal content of an audit letter. It has been discussed in RTP also. That is objective and what are the contents of the audit letter of audit engagement letter. So these are objective and scope, and then there is identification of applicable FRF. Then third is responsibility of management, fourth is responsibility of auditor, and fifth, reference to any form or report to be issued by the auditor during this audit engagement or at the conclusion of this audit engagement, and a statement that this form or letter may differ at certain circumstances. So this was essay 210, agreeing the terms of audit engagement.